Hey, what's happening, everyone? Aaron Jackson here with the Rotation Report. This is not financial advice after hours edition. Oh boy, apparently Anthropic can do anything and everything. And by the way, headline hitting the tape tonight, Anthropic selling some shares so employees can get out. Who would have seen that one coming? And yeah, a lot of destruction out there in these streets, no doubt about it. I would say maybe the people telling you the AI is so great are also just trying to unload, $1 trillion IPOs on us, in unprofitable companies. So, like, that's a thing. That's a thing. But, big week this week. Starting off, first up, NVIDIA, Wednesday night's the earnings. The story has not changed here for the whole quarter, right? You had that fake break above this extension area, 194, 195. Are they going to break it? Maybe if you get through there, I think 260 or so, 265, something like that's the next zone. Until it happens, call bullshit. But that's tough when you have the event coming, right? But the real event, I think that people are not paying attention to, is next week. Apple has a series of announcements with their new next gen AI devices. There's talk about pendants and the wearables, the glasses. Are we all in on glasses as the next form factor? So definitely keeping an eye on that one. Did not get through the 50-day moving average, but yeah, kind of. It's struggling. It seems like it's going to fail. We'll see. And you can see Apple versus the Mag 7. Love that. Probably the best of the laggards, right? Best in class there. Broken the downtrend from the post chat GPT era, right? So you like that. And then moving on, oh boy, IBM, a lot of destruction out there, getting smoked today. And I'll tell you what, say what you will about the AI, but it's nice to see some actual market forces, some actual creative destruction in the marketplace. Screw it. Like, what has IBM done? Like, what kind of value have they added? Really? I mean, really. So a lot of these companies that do not need to exist and their lifespans were extended by, QE, zero interest rate policy, all that stuff. And they've just been kind of gliding by and buying back shares and not really doing anything and just having an entrenched customer base. Maybe it's time for them to go. Maybe it's time for them to see some losses, some destruction. So I don't think, you can say, well, this destruction is going to continue and we might even get a crash out of it. Well, if you do, that could be the best thing that happens to the world in a long time, because it's just entrenched interests through the roof out there. But we'll see. And then there's Meta. The other day they announced that they're buying more GPUs. Yay. Anytime you get any sort of headline, they'll just bid it up because, people's attention is focused on these things, and they're like, "Oh, maybe I'll buy that. And it's already fading again. And you want the Nvidia trade to fall apart a little bit? Well, this thing keeps rolling over the next few days, takes out last week's low, and then keeps moving lower. I think the structure is there for it to happen. It's just a matter of, hey, you start showing people, start proving it to people that no, market rejects this idea of just more AI capex. And then today, very interesting gap down in software, IGV. Look at that thing. You had that consolidation there. The gap down, when's that gap going to fill? That's really interesting because look at it. Now we've got the nice, clear, old potential support in play right here, right now. Did AI jump the shark again? Did the disruption jump the shark again? Maybe. The problem with all these software stocks is they've been building their business on the idea that they deserve to be priced to fantasy, and then also they don't have earnings. They have negative incomes. So I think a lot of us forget, ideally, at the beginning, stocks were supposed to be claims on a company's earnings stream in the future, but there's no earnings. So lots of support here, and you could say, bounce for sure, but bigger picture, what are we doing here? You could see why it could continue. And I was digging through the list. I was like, what can we find that was kind of has some good fundamentals, although maybe not that profitable? MongoDB databases. We like the databases. Old support zone in play here, and the 200-day moving average. I bought a little. We'll see how it goes. We'll see. We'll see. And then you can see software relative strength to versus the S&P 500. You can see maybe we've got a giant bull channel here in this post-COVID era. Maybe we'll see. It's a tough one. It's a tough one. I can adjust that line a little more, maybe one more week, one more time, but we'll see about that. But no, like, are we really that concerned about AI just destroying society and laying waste to everyone's jobs and lives? And if the NASDAQ, the company, has broken down out of this double top here, look at that thing. It basically targets a test of the Liberation Day low zone somewhere around there. So like, are we really that concerned, or is it just like NASDAQ 100? Those type of names are just the new global laggard, and this AI capex, spend is just like, not it. That could very well be the case. Like, I think you'd be a lot more concerned about it if NASDAQ was still continuing to new highs. And then we've got SoftBank. They just got the new OpenAI valuation out there, and everyone was excited for that. And look at this thing just fade right back to that 200-day already. That got real sloppy really quick. Starting to think actually it would break down from here. Kind of surprised. It looked a week or two ago, it was like, all right, maybe we got something to work with, but pretty sloppy, pretty nasty here. Maybe it takes another couple weeks, but be on the lookout for that. But the real big problem in the market is we are now seeing the weakness spread to financials. Here's banks. Are we sure this is all AI? I'm not convinced. I mean, they'll make it about AI for sure, but like, banks here, 3-month lows. I don't know. Is that a top? Could be. Keeping an eye on some of them. And then if you look at the XLF, the financials, they'll tell you, don't worry. It's the private equity, the private credit. It's contained to software. It's not a big deal. Don't worry about it, guys. No. 2, 3-year lows in financials relative strength here, and getting worse by the hour here. We got more room lower in Blue Owl. So, odds are pretty good. This keeps bleeding out, and not contained. We'll be worried if this starts to hit the insurance. There's a lot of dead bodies in the insurance industry. So, this could be pretty nasty here in the coming weeks. We'll see. Keeping an eye on this RSI zone. It's a neutral RSI zone. This goes on a little bit longer. You could see that thing really fall apart there. And then just through this Innovex International, these are the types of stocks we want to be owning, right? Energy. It's energy services. I don't know, breaking a 12-year downtrend. So there you go. Random chart of the day. And then if we're looking at some other stuff here, the momentum factor ETF, again, like failed to break out here. It's just kind of wedged up here. Keeping an eye on it. Maybe NVIDIA can just make a miracle happen and this thing breaks up. But ultimately, slowly but surely, it does seem like this is just going to start bleeding. But time will tell. And then we've got low volatility versus high beta. Still not the big return here. Still a larger downtrend. And you could say maybe in the next few days to the end of the week, it's going to creep higher and then break out. That could be. And it's been pretty insane how, strong the demand is for just anything defensive is. Staples, healthcare. I thought healthcare had 2 chances to really roll over, and it's not. So despite all the problems, healthcare being strong, that's very interesting. So, we're not there yet. There is a chance maybe things break right with Iran, and then you get a little more risk on behavior if they just don't make a huge incident out of it. We'll see. But real chance that we are very early on in whatever the hell's going on. And then you've got here's the equal weight consumer discretionary versus staples ratio. And you can see big double top continues to make new lows today. Like, a lot of retail was hit. Was that because of the tariffs? It was, hey, the tariffs didn't go as hoped and now they're worse. I have no idea. Whatever's going on, paychecks is bidless. This thing has been cut in half in a straight line. And this thing is just going lower. So we're thinking risk off until basically you get down to this little blue zone. So some plenty of risk off room to run there, no doubt about it. And I did want to throw Nasdaq in here, not for any analysis on Nasdaq, but check it out. We're throwing Bollinger Bands on everything these days. It's really interesting that a lot of times you're getting, moves down to the bottom band and then a bid back up. But we want to keep an eye on the direction of the bands and everything we're trading. These daily Bollinger Bands you can use weekly too. I like the daily. Just focus on that. Focus on that little middle line there. Just what direction are these things heading, right? Because it's like, all right, you got stuff that's not breaking down, but then the bands are bleeding lower, and that's just a good tell. And then if you run into a band that's, stock is selling off and it runs into a band that's increasing, that's like, all right, get the hell out. Get the hell out of your sale or buy the dip, right? And vice versa. So definitely just wanted to throw that in there. But yeah, that'll do it for me tonight. I hope you guys have a great day, great night. And yeah, yeah. I think we got it. I think we covered it all. Just it's nice to have market forces in play, no doubt about it. And yeah, that'll do it for me. And if you like the video, do me a favor and like the video. Until next time, friends, peace.